Hi, my dear friends. This is Mohd Rafi, faculty on Indirect Taxes. Dear friends, now I am going to be present December 2021 CA Final Indirect Tax Laws question paper analysis with solutions. Before commencing, my dear friends, presenting in front of you very important announcement from our Unacademy CA iconic program, a flagship program for CA final aspirants. Here we have live mentoring platform LMP, one-to-one doubt solving session on live mentoring platform, followed by evaluated test series. There are 3 test series are conducting for every exam attempt. Under the iconic flagship program subscription, learners will get printed books from Unacademy top educators as well as Yashas Academy educators. We too have under the live mentoring platform Discord community building platform, where one-to-one live mentoring in iconic, which has been launched now, my dear friends. Give your exam preparation with an extra edge with our new live mentoring platform. Experience personalized learning like never before with our seasoned doubt solvers. Discuss your doubts, clarify your concept and enhance your exam preparation with just a click in Unacademy application app. Give your exam with greater confidence. Get your live queries solved on daily basis from top subject matter experts. As I told you, Unacademy conducting the test series which is evaluated by Unacademy top educators. Give your exam preparation an extra edge with our latest addition in iconic subscription. There is a 3-stage test series for May 2022 attempt onwards. Live test on 40%, 80%, 100% completion syllabus. 3 exams are conducting for every exam attempt. Gauge your preparation and exam readiness with our latest test series. Test series followed by analysis class and detailed evaluation of answers by subject matter experts as a friendly nature will be guide you. Get personalized guidance and feedback from expert basis your performance. Subscribe iconic subscription CA final group 1 while using my code Rafi LIVE live. Don't forget it, my dear friends. You can subscribe for 3 months, 6 months, 12 months, depends upon your requirement and preparation time. You can subscribe iconic subscription for CA final group 2 using my code Rafi LIVE. By using my code as educator code, you will get 10% flat discount from the existing subscription price. Further, you can also subscribe iconic subscription CA final combo offer group 1, group 2 using the code Rafi LIVE, wherein you have subscription 3 months, 6 months, 12 months, 24 months to crack your examination. Don't forget, use my code Rafi LIVE to get 10% flat discount. With this, my dear friends, now I am presenting the question paper December 2021 CA final Indirect Tax Laws analysis with the solutions are as follows. Look here, my dear friends. December 2021 CF final. Indirect taxes question paper, wherein we are covering now 70 marks of question paper, because 30 marks, as you are aware of that, multiple choice questions you have to mark in the particular separate sheet and handing over to the examiner. So balance 70 marks question paper, which now I am analyzing for your kind consideration. December 2021 CA final indirect tax laws paper number 8 is as follows. Question number 1, referring to you, my dear friends. Reading as follows. Miss Priya Infra Limited, a registered supplier under the GST in the state of Kerala, is engaged in the construction business. It provides the following information for the month of April 2021. Serial number, particulars, amount in rupees. Outward supplies. Transferred one load of tiles to its branch in Cochin, Kerala from its head office at Trivandrum, Kerala. Both places are under the same GST registration. Rupees 7,50,000. 2. Provided pure labor services of construction of single commercial unit not forming part of any complex to a customer in Bengaluru, Karnataka, 15 lakhs. 3. Supplies a consignment of marbles in the territorial waters to Classic Builders LLP Limited Liability Partnership Firm. The said territorial waters is located at a distance of 11 nautical miles from the baseline of state of Kerala and 12 nautical miles from the baseline of state of Tamil Nadu. Total rupees 6 lakhs. Received an advance for further future supplies of goods and services from a customer in Kerala, of which 70% is related to future supplies of services, total 7 lakhs. Computers used for business purpose was given free of cost to an unrelated persons based in Kerala. Computer was purchased 2 years back at cost of rupees 88,500, including the GST 13,500, having a WDV of 71,685 as a date of sale. Open market value rupees 55,000 excluding GST. No ITC taken on this computer at the time of purchase. The value is nil because freely given. Inward supply. Availed services of an arbitral tribunal in Trivandrum, Kerala to settle a case related to RERA Act, 7 lakh. Purchased construction material from Wahoo Steels Limited, registered in the state of Andhra Pradesh, 15 lakh. Purchased a new truck from a dealer in Cochin, Kerala for transport of materials, 12 lakh. The company provides the following additional information. Paid 6 lakh rupees as remuneration to an independent director based at Cochin during the month. 2. The company claimed depreciation under the Income Tax Act 1961, a new truck purchase including all applicable taxes. 3. E-invoice portal shows Wahoo Steel Limited GST number has been enabled for e-invoicing. However, the supplier did not issue e-invoice or tax invoice with invoice reference number. The invoice was reflected in the GSTR 2A. Next one, turnover of Mrs. Priya Infra Limited for the previous financial year was 180 lakh. The rate of CGST, SGST, IGST are 9%, 9% and 18% respectively for both inward and outward supply of goods and services. And the last point, all the amount given above are exclusive of taxes wherever applicable. From the information given above, you are required to compute the minimum net GST liability payable in cash, CGST, SGST, IGST as the case may be, for the month of April 2021. Reasons for treatment need to be given. An excellent problem for 14 marks appeared in your December 2021 CA final paper number 8 indirect tax laws. How to answer? The damn easy, my dear friends. Really, to speak, damn easy. How to answer this? Presenting one by one for your kind consideration as follows. In the given case, sir, if you refer here, the Priya Infra Limited, basically they are in the business of construction business. They are in the construction business. Good, very good. If so, first point here, if you refer, you will understand. Transferred one load of tiles to its branch in Cochin, Kerala. They are basically in state of Kerala. They transferred to their branch in Cochin within the same state from its head office Trivandrum, Kerala. Trivandrum, Kerala, Cochin also in Kerala. Intrastate movement of the goods between the head office and branch office having one registration is not a supply. Therefore, I can say that 7,50,000 not a supply. What is not a supply? Question of GST does not arise on it. If it is not a supply, question of GST does not arise on it. Not a supply. Not a supply. Second one, if you refer, my dear sir, they have provided services, pure labor of construction of a single commercial unit. Single commercial unit taxable. Single residential units other than form part of complex exempted. Since it is a commercial unit, pure labor services taxable. Where they provide the services? From the state of Kerala in the state of Karnataka, Bangalore. Therefore, it is taxable supply. It is. What type of supply? Interstate. It is interstate, my dear. Interstate supply. Liable to pay IGST at the rate of 18%. They given here. The GST rate is 18% will apply on such supply. Further, point number 3. Supply a consignment of marbles in the territorial waters of to a classic builders limited liability partnership firm. The said territorial waters is located at a distance of 11 nautical miles from the baseline of state of Kerala, 12 nautical miles from the baseline of state of Tamil Nadu. So what is the nearest state? Is state of Kerala. That means supply of consignment of marble in the territorial waters within 11 nautical miles from the state of Kerala is the place of supply. Here the place of supply is equal to Kerala. Supply of goods supplied. Where they supplied? From where? From Kerala. So it is intrastate supply. Is it taxable supply? Yes, taxable supply. Intrastate. This intrastate supply. Liable to pay CGST 9% each. Further, my dear friends, point number 4. Received advance for future supplies of goods and services from a customer in Kerala, of which 70% relates to future supply of services. Now, my dear friends, 7 lakh is total amount received in advance. If supply of goods advance received, which is not a taxable, which is not a time of supply, payment received in advance for supply of goods, not a time of supply, which we already understood in our regular studies. However, advance received for supply of services to be supplied in future, if so, the advance payment is a time of supply if it is services to be supplied in future. Therefore, out of 7 lakhs, 70%, if you refer here, 7 lakh, 70%, 4 lakh 90,000 is taxable supply. It is taxable. Time of supply is in the same month of April 2021. The taxable supply will attract the GST. Here, receive advance from where they received? From a customer in Kerala. So CGST, SGST 9% each will apply. Further, my dear friends, point number 5. Computer used for business purpose, that means business asset has been transferred free of cost without any consideration. If there is no consideration, there is no supply, will apply GST unless it covered under Schedule 1. Under the Schedule 1, permanent transfer of business assets on which input tax credit has been availed. In the given problem, it is very clearly stated that no ITC claimed on such computer at the time of purchase. So not covered under Schedule 1 because they are not related parties. Supplied to unrelated person, they said. Therefore, it is not covered under Schedule 1 and not for consideration, not covered Schedule 1. Therefore, this transaction not taxable. Under GST. So 5 points we analyzed. Let us put in a tabular format the values by computing as follows. Answer to this. Look here, my dear friends. First case here, intrastate branch transfers where there is no separate registration. In that case, not a supply, no GST. Few labor services to Karnataka from Kerala, IGST at the rate of 18%, 2,70,000. Got the clarity, my dear friends? Further, my dear friends, supply of marbles, intrastate supply, place of supply Kerala, because nearest to nautical miles from the place to the location of supplier. So 4,90,000, 70% of the 7 lakh, 70%, 4,90,000, on which 9% CGST, 9% SGST, 44,100, 44,100. Further, computer given free of cost, ITC has not been availed on such asset at the time of purchase, no consideration, not covered under Schedule 1, therefore not attract GST at all. So we got total supply forward charge, CGST 98,100, SGST 98,100 and IGST 2,70,000. Up to this outward supply we come across. Further, my dear friends, the problem also says in the given case, here if you refer, inward supply, where they availed services of arbitral tribunal in Trivandrum, Kerala, to settle a case relating to RERA Act, means for the business purpose they received the services. From whom received? The arbitral tribunal. Who received? Priya Infra Limited. Priya Infra Limited is a business entity. Business entity whose previous year aggregate turnover they given here 180 lakh. So 180 lakh, more than the threshold limit for registration. Therefore, it is taxable supply which will apply reverse charge mechanism. That means the 7 lakh will apply 9% CGST, 9% SGST, which is 63,000 CGST, 60,000 SGST under RCM has to pay. While paying under RCM, you are not eligible to avail input tax credit. But the what you are going to pay under RCM, since it is a business nature, inward supply on which RCM apply will be eligible for input tax credit. While paying the tax under RCM, you are not utilizing any input tax credit. There further, point number 2. Purchase construction material from Bahu Limited, Bahu Steels Limited. Repeating, purchase the construction material from Bahu Steel Limited in the state of Andhra Pradesh. 15 lakhs they purchase. Now, for which we have given here point number 3, adjustment. If you refer here point number 3, adjustment, e-invoice portal is enabled. E-invoice is mandatory to Bahu Steel Limited, but they have not issued the e-invoice, they have not issued the tax invoice. But that particular invoice was reflected in the GSTR 2A return. No use. Whatever there in the GSTR 2A is not eligible for input tax credit unless you satisfy the conditions. As a result, if e-invoice is mandatory, there must be invoice reference number, without which such invoice is a waste paper to throw into the dustbin. Invoice reference number not there for e-invoice, input tax credit not possible to avail. Is a waste paper only. Even though the value is reflecting the GSTR 2A, no use. Input tax credit not allowed. So here no ITC. Further, my dear friends, purchase a new truck from a dealer in Cochin, Kerala for transport of materials, rupees 12 lakh. It is eligible for input tax credit as a capital goods, provided conditions should be satisfied. Here they said here, point number 2, if you refer, my dear, you understand. Point number 2, if you refer here, the company claimed depreciation under the Income Tax Act 1961 on a new truck purchase, including all applicable taxes. Then section 16 subsection 3 of CGST speaks very clearly, if you want to claim the depreciation including the GST on which you want to claim depreciation on the asset, that GST on the asset is not qualified for input tax credit. If you not claim the depreciation by capitalizing the GST will qualify for ITC. Since you are capitalizing the GST along with the asset to claim depreciation benefit, then should not eligible to claim input tax credit. That's why no ITC for the given case. Got the clarity, my dear friends? With this, let us have the inward supply. Here, arbitral tribunal service received qualify for ITC on 7 lakh, 9% CGST, 9% SGST is 63,000 CGST, 63,000 SGST. The same will qualify as your output tax liability. Arbitral tribunal and RCM liable to pay output tax so much. Further, my dear friends, further what else are given here? Further, paid rupees 6 lakhs as a remuneration to independent director. Independent director, not an employee of the organization. Payment made not in the course of employment by the company to the director is under RCM. Where the director located in Kerala, as per section 9 subsection 3 of the CGST, reverse charge applicable. Reverse charge applicable means the company liable to pay GST. If the company liable to pay GST, company can avail ITC? Yes, the company is eligible to claim ITC of that amount of GST. So here 6 lakhs on which 9% CGST, 9% SGST. 6 lakhs, it is 6 lakhs on which 9% 54,000. If you refer here, 6 lakh on which CGST, SGST 54,000 each. Of course, material purchase from Andhra, from Bahu Steel, where invoice is mandatory, e-invoice. E-invoice not there with IRN, invoice reference number, then ITC is not allowed. ITC would not be eligible in the hands of recipient as such. Invoice would without IRN would be invalid and treated as only a piece of paper having no value under GST and no tax, therefore is not a tax invoice. As a result, in the given case, ITC not allowed. Further, my dear friends, truck purchase, GST on truck capitalized to claim depreciation, therefore ITC not allowed. However, here arbitral tribunal, this value and remuneration paid to director, this value will qualify for input tax credit. I have taken as input tax credit. The same has to pay by tax, by electronic cash ledger. See here, 63,000 arbitral tribunal services liable to pay by cash, 54,000 rupees remuneration paid to director, independent director, on which GST liable to pay by electronic cash ledger. The same will qualify for input tax credit. I have taken. So we got the values, output tax, input tax, and set off it. Total tax output forward charge 98,100, 98,100, same value here as I mentioned, 98,100, 98,100 output tax liability. Then input tax we have 1,17,000, 1,17,000, 1,17,000 CGST, 1,17,000 SGST. First CGST case should be set up against CGST payment. Excess will be IGST payment purpose. Therefore, excess of 18,900 CGST first adjusted against IGST payment. The next SGST taken for IGST payment. So here CGST, SGST liable to pay nil and nil. IGST 2,32,200. Further, he liable to pay under the reverse charge the arbiter tribunal as well as remuneration paid to independent director. That sum should be paid here as output tax liability without utilization of input tax credit. These two consist of the particular arbitral tribunal plus remuneration paid to independent director, both, which is 1,17,000 CGST liable to pay by electronic cash ledger without utilizing of input tax credit, and SGST same amount. As simple as that. With this, question number 1 is completed for 14 marks of your December 2021 examination. Further, my dear friends, referring to you here, question number 2. Now referring question number 2 from the December 2021 examination question paper, analyzing question number 2 in that part A. Question number 2, subpoint A. Jupiter Chemicals Limited, JC, is a manufacturer of industrial chemical and having its factory at Haridwar, Uttarakhand, and registered under the GST. It has its subsidiary company Angel Traders Private Limited, AT, with holding of 75% of its share capital. Angel Traders, AT, is engaged in trading of chemical manufactured by Jupiter Chemicals, JC, in North India and registered under the GST in Delhi at warehouse address. Jupiter Chemicals, JC, has also appointed a consignment agent, Popular Distributors, PD, in Chennai and catering the southern Indian market. JC, Jupiter Chemicals, has also set up a state-of-art research and development center along with the laboratory near the Haridwar factory and undertakes testing and development activities services for chemicals from outside customers across the country. Following information are available for the month of April 2021 of JC Haridwar, Jupiter Chemicals Limited. They are given here 6 points. Point number 1, reading as follows. Jupiter Chemicals supplies the chemicals to Popular Distributor Chennai during the month. The PD should the above said goods. The Popular Distributor sold the above said goods to the unrelated wholesalers in the state of Tamil Nadu and Andhra Pradesh for rupees 60 lakhs during the same month. Open market value 55 lakhs, total 45 lakh. Point number 2. Jupiter Chemicals supplied chemical to AT, means Angel Traders, during the month of April. The AT, Angel Traders, further sold the said chemicals to unrelated retailers in Delhi for 42 lakh, and AT, namely Angel Traders, is not eligible for full input tax credit. Open market value is 38 lakh, total is 30 lakhs given. Point number 3. Jupiter JC exports chemicals to South Africa with the payment of IGST, and consideration for the same was received in the convertible foreign exchange. Total is 28 lakh. JC Jupiter Chemicals provided inter-state supply of testing services to various customers during the month, 8,50,000. Supply of chemicals to one of its customer in Mumbai who required the chemical to be tested before dispatch and subject to test report coming according to his parameters. The testing was successful and testing charges of rupees 50,000 charged extra, total 6,50,000 rupees excluding testing charges. Further, my dear friends, supply of chemical at subsidized rate for research and development activity not related to the business of JC to an unrelated charitable association in Haridwar under Uttarakhand. Open market value of its is rupees 6,50,000 rupees, total 5 lakh rupees. Assume the rate of GST, CGST, SGST 6% each, IGST 12% on chemicals, and on testing development services IGST 18%, CGST, SGST 9% each. You are required to determine the taxable value most beneficial and the GST liability of IGST, CGST, SGST of Jupiter Chemicals Haridwar for the month of April 2021. What an excellent problem it is. Is a valuation with combination of valuation rules. Easy to answer this, my dear friends. Damn easy to answer this. Now presenting here. Presenting it in a simplified manner. Here, first and foremost, Jupiter Chemicals and Angel Traders are related parties. 75% is there holding subsidiary company concept. 25% sufficient to consider. So, my dear friends, here JC and AT are real parties. Further, JC appointed popular distributor PD. JC and PD, principal and agent. They are the principal and agent. Covered under Schedule 1, point number 3. Supply of goods by the principal to his agent, where the agent undertaken to supply the goods on behalf of the principal, or supply the goods by the agent to his principal, where the agent undertaken to receive the goods on behalf of principal, is the way in which we can able to identify the Schedule 1, point number 3 is applicable here. And they too have separate research and development unit, testing unit for testing the chemicals to outside customers who are non-related parties. Got the clarity, my dear friends? So, with this information, look the point number 1, which says that JC head office Jupiter Chemicals supplies the chemical to PD Chennai during the month. PD means popular distributor, namely agent. Principal and agent covered under rule number 29, where the PD sold the above said goods to the 100 persons in the state of Tamil Nadu, Andhra Pradesh for 60 lakh during the same month. Open market value 55 lakh. Now, the agent sells to unrelated party at what price? At 60 lakh, on which 90% as per rule number 9, rule number 29, as per rule number 29, 90% of 60 lakh, which is 54 lakh, or open market value 55 lakh, which is beneficial, that can be chosen by the principal. namely JC, Jupiter Chemicals. So the valuation here is, it is interstate supply, the value here is 54 lakh. Interstate supply here value is 54 lakh. Got the clarity, my dear friends? Will attract IGST since chemicals 12% IGST, which will attract IGST here at the rate of 12%. IGST at the rate of 12% applicable on this. Further, point number 2, JC, Jupiter Chemicals, JC, supplied chemicals at 80, means angel traders, who are the unrelated, who are the related parties, at what price they supplies here? At 30 lakhs. But the angel trader, related party, further sold the said chemical to 100 persons at 42 lakh, and the angel traders not eligible for full amount of input tax credit. In that case, my dear friends, we have the concept here, rule number 28. Point number 2 belongs to rule number 28. Supply of services between related parties or distinct persons. Open market value is to be taken as a final, rule number 28A. Otherwise, proviso to rule number 28, at the option of the supplier, namely here JC, Jupiter Chemicals, they may choose 90% of the price at which the recipient sells to unrelated party. At what price they sells to unrelated party? At 42 lakh. So 42 lakh here, 42 lakh multiplied by 90%, 42 lakh multiplied by 90%, which is 37.8 lakh. So open market value 38 lakh. So better to go with proviso to. So my dear friends, as per rule number 28, supply between related parties or distinct persons, rule number 28A, open market value is the final. Or at the option of the supplier, proviso to rule number 28, where 90% of the value at which the supplier, namely 90% of the value at which the recipient supplies to non-related party. Here recipient 80, angel traders supplying to non-related party at rupees 42 lakh, on which 90%, 37 lakh 80,000, or open market value 38 lakhs, which is beneficial, can be chosen by the supplier, namely the here the particular Jupiter Chemicals. So here best value is 37 lakh 80,000. Is the value in the given case. It is interstate supply. Where they are locating, ma? They are locating here. In Delhi, therefore interstate supply from Uttarakhand to Delhi, supply interstate, which will attract the IGST at the rate of 12%. This will attract IGST at the rate of 12%. Further, JC exports chemicals to South Africa with the payment of IGST, and consideration for the same was received in convertible foreign exchange. So it is interstate supply. Export, import treated as interstate supply as per 101st Amendment Act in the year 2016. So it is interstate supply. IGST will attract at the rate of 12% on 28 lakh. Further, point number 4, JC Jupiter Chemicals provided interstate supply of testing services to various customers during the month. Outsiders. So services, which is interstate supply across the pan-India basis. So IGST 18% will apply on this. Further, supply of chemical, one of its customer in Mumbai who is required the chemical to be tested before dispatch of the goods and subject to the test report coming according to his parameters. Testing was successful and testing was charges was rupees 50,000, which is extra. 6,50,000 is the supply of chemicals, testing rupees 50,000. Testing is mandatory to supply along with the supply of goods. So supply of goods 6,50,000, supply of services 50,000. It is together called composite supply. What is the principal supply? The principal supply predominant element here is chemicals, goods. Therefore, it is 7 lakhs, 6,50,000 plus 50,000, total 7 lakhs, on which the IGST here will here see to of its customer in Mumbai. So IGST at the rate of 12% will apply on the entire supply of 7 lakh. Further, supply of chemical at subsidized rate for research and development activity not related to the business of JC to an unrelated charitable association in Haridwar. So supply of services from Haridwar, they have Haridwar no chemical testing factory, where it is Haridwar factory, and undertaken to supply testing activities, research activities. So Haridwar to Haridwar interstate supply of chemicals at subsidized rate. Subsidized rate means at discount rate. Discount is allowed to as a deduction only. What rate is actually? Open market is 6,50,000, but 1 lakh, 5 lakh rupees they supplied. 5 lakh rupees supplied to unrelated party by giving a discount of 1,50,000, allowed only. So 5 lakhs on which intrastate supply. It is intrastate supply. CGST 6%, HGST 6%, because intrastate supply of chemicals it is. That's why. Supply of services here alone 18% GST. 8,50,000, 18% interstate supply GST. That's it, my dear friends. Problem has been analyzed. Put in a tabular format. Look here, solution. Statement showing the taxable supply of Jupiter Chemicals, Haridwar, Uttarakhand. Interstate supply. Here open market value 90% of 60 lakhs, 54 lakhs is considered 54 lakhs. See here, first case we got 54 lakh. Second one, interstate supply of chemical to 80%, rule number 28. In that case, 90% is at which the recipient supply to non-related parties, 37,80,000 or 38 lakh, which is beneficial. 37,80,000 rupees is the beneficial. So 37,80,000 is the interstate supply. See the same value we got here, 37,80,000 we got here, 37,80,000. Further, export is the interstate supply 28 lakhs. Interstate supply of chemicals along with the testing, composite supply, principal supply is chemical, total 7 lakh is interstate supply. Total interstate supply 1,26,80,000, on which IGST 12%, 15 lakh 21,600. Further, intrastate supply of services, here I said 8 lakhs on 8,50,000. On 8,50,000, what rate? 18% of IGST. 8,50,000, 18% of IGST is 1,53,000. 1 lakh IGST, 1,50,000 interstate supply of services. Further, interstate supply of chemicals, intrastate supply of chemicals 5 lakhs within the state, Haridwar to Haridwar, CGST 6% each, which is 30,000 rupees. CGST 30,000 SGST. As simple as that. Answer is in front of you as a hot cake. Just have it. Further referring, my dear friends, from here furthermore, question number 2, in that point number sub point B, question number 2 sub point B, referring here as follows. PPR Engineering, a manufacturer of tools and spares of Punjab, imports a CNC machine from USA. Contracted CIF price for import was $15,500 due to fluctuation of the price of the machine in international market. Price of the machine was renegotiated after placing the order, and finally the machine was agreed to be imported at USD 14,000 CIF cost insurance freight basis. Actual freight paid $3,000 and insurance was cost $1,800. Other information are given below. The cost of inspection carried out by foreign supplier on his own account was $300 and the same was neither required under terms of contract nor for making the goods ready for shipment. Commission payable to local agent of the exporter $184. It is not a buying commission. Further, date of bill of entry presented is 25th February 2021. On this date, basic custom duty 10%, rate of exchange notified by the Central Board of Indirect Taxes and Customs CBIC for $1 equal to 73 rupees. RBI reference rate is ₹71 per dollar. Date of arrival of aircraft at customs station is 5th March 2021. On the said date, the BCD 15% rate of exchange notified by CBIC 74 rupees, RBI exchange rate 72 rupees. You are required to compute the assessable value. And calculate the basic custom duty payable by PPR Engineering. Very simple, my dear sir. It is actually what is given here, air freight is given. CIF value should be considered $14,000. So, see the given CIF value $14,000. From that, you have to deduct from this particular value. You have to deduct the given air freight. You have to deduct given air freight. How much is given here? $3,000. And deduct the insurance, actuals insurance. How much is given? 1,800. Both are deduct. You will get $14,000 minus 3,000 minus 1,800. You will get FOB value 9,200 of FOB value of exporter. So add to that rule number 10(1) expenditure. They given cost of inspection carried out by foreign supplier on his own account was $300 and the same was neither required under the terms of contract nor for making the goods ready for shipment. Cost of inspection carried out. foreign supplier on his own account. Sir, this expenditure is a post-shipment nature. Cost of inspection carried out. It is not a precondition for import. As a result, this post-shipment expenditure not relevant to consider in our computation. Further, my dear friends, point number 2, commission. Yes, rule number 10(1) expenditure, if it is not a buying commission. They very clearly said it is not a buying commission. Therefore, add up rule number 10(1) expenditure. How much here? It is coming here means commission $184. That's it. You will get FOB of customs. FOB of customs 9,384. Further, my dear friends, for the want of space, I just moved here. Further, if you got FOB value of customs, so the FOB value of customs $9,384, add to that rule number 10(2) expenditure. Rule number 10(2) expenditure. When we talk about air freight should not exceed 20% of the FOB value of customs. FOB value of customs, here they given 9,384 multiplied by 20%. $9,384 multiplied by 20%, which is $1,876.8, or actual air freight 3,000, whichever is less. Which is less here? 1,876.80 is the lesser value. Got the clarity, my dear friends? Therefore, add here freight, air freight added. Thereafter, insurance. Insurance, how much? Insurance is actuals $1,800. Then you get CIF value here 9,384 plus 1,876.80 plus 1,800. Total you will get here CIF value is $13,060.80. That you multiply with exchange rate. Exchange rate of the CBIC at the time of submission of the bill of entry. At the time of submission of bill of entry, exchange of the CBIC $1 equal to 73. That is relevant. $1 equal to 73 rupees is relevant. Thereby you get in Indian rupees value into 73 rupees, which is 9,53,438. 9,53,438 is our CIF value Indian rupees, on which you apply BCD. What rate of BCD will apply? Here BCD is given. To rate of BCD. So date of submission of bill of entry, date of arrival of the aircraft, whichever is later. Which is later here? 25th February 2021 or 5th of March 2021. 5th of March 2021 is later. As on that date, what rate of BCD? 15%. So BCD applicable 15% on such value. 15% is equal to 1,43,016. Round off nearest rupee. On which you apply social welfare surcharge. They are asking here only the BCD computation. For PPR, BCD only I computed. $1,43,016, which is given here clearly, neatly for your kind consideration. Got the clarity, my dear friends? Any difficulty in the given case? Further, question number 3. I am referring here. Question number 3 in that part A. A2X Service Limited, registered under the GST, is engaged in providing various services to various educational institutions. The company provides the following information in respect of the service provided during the month of April 2021. Description of services provided. 1. Serial number 1 to 5 given. Point number 1. Transportation of students and staff of Love All, a deemed university. 2. Catering services provided to rank CBSC school. 3. Security services provided to Win CBSE school for its annual sports daily held annual sports day. Repeating again, security services provided to Win CBSE school for its annual sports day held at ICAI Sports Complex owned by the Government of India. 4. Supply of online periodical since online periodical science journal to Merit CBSE school for its higher secondary students. 5th one, services in relation to placement of students to skills. A government recognized vocational training college. Compute on the tax liability otherwise of the above transaction of GST law. Also state the correct legal provisions for the same. Whether the following 5 transactions are taxable or not. Taxable or exempted. Explain with the reasons. Simple question, 5 marks, 5 points in your pocket if you know the provisions. Here, my dear friends, if you refer carefully, analyzing here. 1. Service provided by A to X Service Limited to school. Transportation of students and staff of Love All, a deemed university. Sir, transport facilities of a student, transport facility to preschool to higher secondary school up to 12th standard only qualify exemption. Transportation of students, staff, faculty to preschool to higher secondary school up to 12th standard, but here given to whom? As per to Love All, a particular deemed university, which is not qualified for exemption. So A to X Services Limited liable to pay GST, not qualify exemption, is a taxable supply. See, first point, taxable supply. Why taxable? Since not provided to preschool, higher secondary school, it is a deemed university, which is taxable. Point number 2, catering services provided to rank CBSE school, catering. Security, what we can call as security services, catering services, cleaning services, or catering services including midday meal scheme services provided to preschool or higher secondary school only qualify exemption. Repeating again, catering services including midday meals sponsored by the government provided to preschool or higher secondary school up to 12th standard only qualify exemption. It is CBSE, Central Board of Secondary Education school, therefore qualify from exemption. It is not taxable, it is exempted. See, point number 2, exempted. Point number 3, security services provided to Win CBSE school for its annual sports day held at ICAI Sports Complex owned by Government of India. My dear friends, be careful. Security services, cleaning services, housekeeping services provided to preschool, provided to higher secondary school up to 12th standard school education in their premises. In such premises only qualify exemption. Outside provided will attract GST. Therefore, it is outside provided here. Therefore, taxable. Not qualify from exemption. Further, point number 4, supply of online periodical science journals to Merit CBSE school for its higher secondary students periodical journals, online periodical journals provided to only recognized degree providing institution exempted. Here it is higher secondary school, therefore taxable. Exemption not allowed. Point number 4 completed. Point number 5, services in relation to placement of students to skill, a government recognized vocational training institution. Sir, placement services provided by a person to others, services in relation to placement of students to skill, a government recognized vocational training institution, will attract the GST. It is not qualified from exemption, is a taxable supply. Further, my dear friends, question number 3 in that point number B. Determine the place of supply in respect of the following independent instances under the provisions of the IGST Act 2017. 1. Miss Purva, an interior design consultant having office at Chennai, Tamil Nadu, provided professional services to Mr. Nihil, who resides in Dubai, for his 2 immobile properties under single contract. One property is outside India at Singapore and another property at Surat, Gujarat. Point number 2. United Traders having a registered place of business at Bangalore, Karnataka, imported instrument used in COVID treatment from London through Vizag, Andhra Pradesh port. Your answer should also include relevant provisions of law. For 4 marks, place of supply. From place of supply, POS, we should say POS. From place of supply. Easy to answer this. Easy to answer this. Dear friends, here if you refer, my dear, in the given case if you refer, first one, Miss Priya, Miss Purva. The name is Miss Purva, not Priya. Miss Purva, an interior design consultant, providing services from Chennai office to Nihil, who is resident of Dubai. That means as per section 13. Services in relation to immobile property. Therefore, 4. Section 13, subsection here 4, which is in relation to immobile property, but provided more than one state, which includes outside India. Therefore, it falls under section 13, subsection 7. It falls under section 13, subsection 7, because provided more than one state which includes outside India. Section 13, subsection 7. In that case, part of services rendered in the state of Gujarat, Surat, part of service rendered Singapore, immaterial, part outside, part inside. The entire part is a mixed supply. Therefore, entire part will attract GST. Treating it as place of supply. Here, place of supply is equal to, place of supply here is equal to the state of Gujarat, Surat. Part is rendered in Gujarat, part in Singapore. What type of services? In relation to immobile property, interior decorating services. Section 13.4. Since more than one state which includes outside India, Section 13.7 speaks the place of supply is equal to taxable territory, which is Gujarat. For the entire supply, we'll apply IGST. Further, point number 2, united traders having registered place of business and import these services, import the goods, here the imported instruments, section 11 refers, section 11 of IGST, import of goods, section 11 of IGST. What is the place of supply? Where the importer has the place of business. Importer, unit traders having the place of business Bangalore, Karnataka. Place of supply is equal to Bangalore, Karnataka. Place of supply, location of the importer. So physically the goods may be imported at Andhra Pradesh, Vizag port, and further may be shifted to location of importer. Directly place of supply is equal to here the Karnataka, where the importer has the place of business. As simple as that. Further, my dear friends, continuation of this. Question number 3, in that subpoint number 3, subpoint C. Supreme Court Decorator imported car music system and GPS devices from Germany. The importer submit following issues for your consideration. Point number 1, 7 music systems were preferred before unloading and before the proper officer has made an order for clearances for home consumption. Before unloading. Therefore, here it is not section 13 here. It is treated as custom duty cannot be levied if the goods has been preferred. 7 music systems were preferred. Section 13 not applicable because 13 will apply of Customs Act 1962 only when the goods after unloading but before the proper officer given the clearances for home consumption. That time preference taken place, section 13 will apply. So here the provision, no duty will be levied on preferred goods under section 13 of the Customs Act if any imported goods were preferred after the unloading thereof and before the proper officer was made an order for clearances for home consumption or deposit in a warehouse, then the importer shall not be liable to be paid import duty. But here before unloading, therefore section 13 not apply. Wherever 13 not apply, section 23 will apply. Custom duty will not be levied under section 23, which is remission of duty. In the given case. Further, point number 2. Point number 2 here. 10 GPS devices were preferred after unloading but before the proper officer made an order for clearance for home consumption. It is a perfectly fitting under section 13, not required to pay the tax. No custom duty will be levied under section 13 of Customs Act 1960. 2 will apply here. Customs Act not 1961. Customs Act 1962. So, no customs duty will be levied under section 13 of the Customs Act 1962. Section 13 will apply in the given case. Point number 2. Point number 3. 30 music systems were damaged after unloading and examination for the assessment by the customs authorities but before actual home clearances. It is a treatment of abatement of duty. Abatement means reduction. to the extent of damage taken place, that much of proportionate amount of duty not required to pay. For example, total duty here for 30 numbers of music systems, total duty is rupees 30,000. For example, there are how many 30 systems were damaged after unloading. So out of here, for example, my dear friends, there are 60 numbers. Assume for sake of discussion, it is duty 60,000. Out of which 30 numbers of music system got damaged. No recovery takes place. In that case, proportionately, duty also will be reduced, which is section 22, abatement of duty, and pay balance 30,000 duty only is sufficient. So the advice is section 22 of the customs abatement will be provided to the extent of damaged units, thereby to the extent of damaged units duty not required to pay is the way in which you can advise as a chartered accountant to the importer. Further, my dear friends, referring to you further more points here. Question number 4A, referring here as follows. Question number 4A. Jai and Company, a registered supplier under the GST, engaged in weaving and into fabrics, has provided the following information. Nature of various intrastate supply during the April 2021, value of supply excluding GST, outward supply of fabric, tax rate of GST, CGST, GST 2.5% each, 30 lakh, inward supply of rayon and tax rate of GST, CGST is 6% each, 24 lakhs of value of supply. Inward supply of services for processing the end, the tax rate CGST, GST 2.5% each, total value of supply of service 4 lakh. Inward supply of machine for weaving the processed and into fabric, tax rate CGST, GST 9% each, total 45 lakhs value of the goods. The concerned has not provided any other supply other than the outward supply referred above. ITC in respect of all types of inward supply is given above was claimed in the relevant GSTR 3B as well reflected in the GSTR 2A return. Other applicable conditions for claiming the refund and duly complied with. You are required to compute the maximum refund amount eligible under section 89 under rule number 89 sub number 5 of the CGST rules 2017 for relevant duty structure. Also provided working note for your calculation. Note, no refund claim under rule number 89 sub number 3 or rule number 89 sub number 4 of the CGST rules is applicable. No refund claimed has rule number 8 means deemed export not there. Only inverted rate of duty tax structure. Sir, here only I am telling you here what is covered only ITC on inputs only will cover for refund under rule number 89 sub number 5. Input tax credit on input services, input tax credit on capital goods not qualify for inverted duty structure. Section 54 subsection 3 class 2 of the CGST Act, resulting that when you apply formula inverted rate turnover divided by total turnover multiplied by total credit on input goods, from that deduct tax payable on inverted turnover. If there is a surplus, you can ask for refund. Shortfall, no refund. Meaning thereby, in the given case, what is my inverted supply? Means inverted supply of fabric, outward supply of fabric is 30 lakh. Inverted supply of an input is 6%. 6% is my CGST SGST. Output tax CGST is only 2.5%. Is the inverted tax structure. So in the given case, turnover of inverted rate, turnover of inverted rate output turnover. How much here? It is 30 lakh divided by total turnover. Total means here it is 30 lakh. Here it is I will put here, otherwise here it is 30 lakh plus the concern has not provided any other services. Okay, inward supply it is. Further, other applicable conditions satisfied. Fine. Here 30 lakhs only the outward supply divided by total turnover 30 lakh multiply by total credit on inward supply of inverted tax, which is 6% each on 24 lakh. On 24 lakh, 6% each means 24 lakh multiplied by 6%, 1,44,000 plus 1,44,000, total 2,88,000. Am I right? 2,88,000. 2,88,000 total tax credit on inputs. This I will present here. From this, what is going to come out? Let us see. 2,80,000. From that, you deduct the tax payable on inverted rate output supply, which is 2.5% each on 30 lakh. 2.5% on 30 lakhs. Here, if you refer, sir, 2 lakh, 30 lakhs multiplied by 2.5%. CGST, SGST. Each one how much comes here? 75,000. 75,000. So, which is 75,000 plus 75,000. Total 1,50,000 to deduct. The balance 1,30,000 is our refund claim. 1,30,000. 1,80,000, 2,88,000, no, it is 2,88,000 minus 1,50,000, 1,38,000. So 2,88,000 minus 1,50,000, the excess credit is 1,38,000. 1,38,000 is the refund amount. So refund is amount equal to, in the given case, 1,38,000. Input tax credit or input services. Input tax credit on capital goods never qualify for refund in the given case of rule number 89, sub number 5 formula. Inverted rate of tax structure, only inputs only qualify for credit. Inward supply higher rate than the outward supply after manufacture. Outward supply lesser rate, resulting excess credit that asks for refund. Formula: inverted rate turnover divided by total turnover multiplied by total input tax credit or inputs. From whole thing deduct the tax payable on outward supply of inverted tax. The excess credit will be claimed refund. Here we got excess credit 1,38,000 because output tax here 1,50,000 on inverted rate of tax structure. Inverted turnover output GST 1,50,000. I have proportionate credit 2,88,000. 2,88,000 minus 1,50,000, 1,38,000. Is it clear, my dear friends? Further, question number 4, sub point B, I am referring here. Comment on the liability to get registered under the GST law in the given independent situations for the financial year 2021. Your answer should also include relevant provisions of law, notifications or circulars as the case may be. The following points 1 to 4 reading as follows, my dear friends. Point number 1. Miss Ridhima is exclusively engaged in export of ready-made garments from the state of Rajasthan, and her export turnover during the year is 17 lakh. Apart from export turnover, she has earned interest on the bank FDR fixed deposit receipt rupees 2 lakh. Also, point number 2, Ajanta Enterprises is exclusively engaged in the trading of exempt goods under the GST in the state of Haryana and has not taken the GST registration. During the year, its turnover from the exempted supply is 47 lakh, and Ajanta Enterprises also sold old generator for 1,25,000 rupees during the year. Point number 3. Mr. P has presence in 2 states, one in Haryana and other in Rajasthan. He is registered in the state of Rajasthan even without crossing the threshold limit. His turnover during the year in Rajasthan 32 lakh and in Haryana is 5 lakh. Is he mandatorily required to get registered in the state of Haryana also? Point number 4. Mr. John is engaged in the business of buying and selling of shares on his own account from the secondary market, and his income from this activity is assessed to business income under the Income Tax Act 1961. During the year, his total turnover from shares was 90 lakh. 4 marks is in Pakistan, if you know the provisions. From registration, required and not required. Dear friends, first case, Miss Ridhima. First case, Miss Ridhima is exclusively engaged in the export of ready-made garments. When you talk about export, is the interstate supply. That to goods. As per section 24, clause 1, mandated registration. Registration mandatory. Because interstate supply. See, first point, registration is mandatory irrespective of the aggregate turnover. Second case, Ajanta Enterprise is exclusively engaged in the trading of exempted goods under the GST. If exclusively exempt goods, no problem, irrespective of the turnover, not required for registration. However, they said here, during the year, its turnover from exempt supply 47 lakh. Ajanta Enterprise also sold the generator 1,50,000, which is a business asset supplied for consideration, will attract the GST. This is supply. So, total turnover how much? 48 lakh 25,000, resulting that more than 40 lakhs. Mandated registration for Ajanta Enterprise, registration mandatory. Third case, Mr. P has presence in 2 states, one in Haryana, other one in Rajasthan. The turnover from Rajasthan 32 lakh and turnover from Haryana 5 lakh. They got registered voluntarily. They got registered in the state of Rajasthan. Total turnover how much? 32 lakh plus 5 lakhs, 37 lakh. What is the limit for registration? 40 lakhs supply of goods. In that case, only for 37 lakhs. In spite of that, voluntarily got registered in the state of Rajasthan, let it have it. But in Haryana, are they required to get registered mandatorily? Since aggregate turnover not exceeded the 40 lakhs, in the other state not required to be registered mandatorily, not mandatory to register in the state of Haryana. Got the clarity? There are two states, one in Rajasthan, the other one here is in the state of Haryana. Turnover here 32 lakh, 5 lakh aggregate, 37 lakh aggregate, only 37 lakh. Here they got registered voluntarily. Very good, registered. Whether here required to register because of having this registration here, this registration here not a mandatory nature, voluntarily got registered. As a result, in the state of Haryana, not mandatory, not required to be mandatorily registered, not mandatory to register. It is not mandatory required to register. It is up to them to decide voluntarily. Further, point number 4. Mr. John is engaged in the business of buying and selling of shares, securities, neither goods nor services, exclusively securities, 90 lakhs turnover, neither goods nor services. Therefore, not required to be registered under GST by Mr. John. Further, my dear friends, in question number 4, point number C, referring here, with reference to the Customs Act 1962, decide the validity of the following independent cases with proper legal provisions. 1. Apex Rubber Limited is a 100% EOU located in Special Economic Zone. It imports certain items from China for its production process. Customs officer proposed to impose anti-dumping duty on such imports. The importer contended that no anti-dumping duty can be imposed on import by 100% EOU under any circumstances. My dear friends, the goods are imported by EOU free from all duties and taxes, which includes anti-dumping duty also, provided the EOU should not supply the goods after importation without payment of duties to domestic tariff area. Therefore, from the given point of view, the importer claim is valid. Further, Customs Department proposed to impose anti-dumping duty retrospectively in respect of certain items. Importers Association claimed that anti-dumping duty cannot be levied with retrospective effect under any circumstances. Sorry, it is not so. Anti-dumping duty can be imposed with retrospective effect not later than 90 days. That means Importer Association claim is not valid. Anti-dumping duty can be levied with retrospective effect not beyond 90 days, not more than 90 days. From today, 90 days, not beyond 90 days. So, retrospectively, anti-dumping duty can be levied not beyond 90 days. Prior to 90 days from now, they can impose from prior to 90 days. I mean to say, within 90 days prior from this date. For example, today date what? Today date is, let us say, 22nd January 2022. Prior to this date, 90 days. From 90 days prior to this date, from 90 days retrospectively can impose anti-dumping, not beyond 90 days. Further, my dear friends, the given statement of the Importers Association is invalid. Further, question number 5. In that, point number A. Messrs. Fly by night traders, a taxable person, issued an invoice on 15th April 2021 involving input tax credit 25 lakh to runaway traders who utilized the same. No supply of goods was involved in this transaction between the two traders. Fly by night traders conducted this transaction at the instance of its tax consultant who was not qualified professional. Explain the relevant provisions in brief and determine the amount penalty leviable under CGST Act, if any, on the person involved in respect of the above referred transaction. Sir, penalty under section 122 will be levied on the person who evaded this type of a tax. How much tax? ITC 25 lakh. Therefore, on Mr. Fly by night issue the invoice without supply of goods. In that case, penalty 100% of the tax or rupees 10,000, whichever is higher as per the CGST on fly night traders, followed by the person who availed the input tax credit fraudulently. Runaway traders also be liable for this penalty. And section 122 subsection 1 capital A new provision has been introduced to impose the penalty on such person who is beneficiary out of the transaction, who may not be the assessee, in the given case, namely a tax consultant who is involved by getting some benefit to do this transaction, also be liable for this punishment. 100% of tax or rupees 10,000, whichever is higher as per the CGST Act. Equal amount as per the GST Act also will be levied. Further, my dear friends, question number 5B, referring here. In the month of March 2021, during the course of departmental GST audit under section 65 of the CGST Act of Always Right Private Limited, audit team observed that input tax credit has been claimed by the company, which is blocked under section 17 subsection 5 of the CGST Act. Further, my dear friends, company submitted its reply contending that the said credit is not blocked credit under section 17(5) and has been rightly claimed. Department was not satisfied with the reply submitted by the company. Audit team served a show cause notice under section 74 of the CGST Act and transferred the matter to the adjudicating officer, and also started recovery procedure under section 78 and 79 of the CGST for recovery of the input tax credit wrongly availed. you are required to comment whether action of the department is to recover the amount is justifiable with the reference to the legal provisions of the GST law. My dear friends, we have a concept. Audit team is empowered to issue show cause notice, but they cannot adjudicate the order. That will be transferred to respect to jurisdictional officer of central tax or state tax as the case may be. However, the department should not be invoke recovery proceedings immediately unless give the opportunity of being heard. Section 78, 79 should not be invoked immediately. So the answer here is the Central Tax Officer of Audit Commissionerate and Director General of Goods and Service Tax Intelligence, hereinafter referred as DGSTI, the Central Tax Officers of Audit Commissionerates and Director General of Audit, Director General of Goods and Service Tax Intelligence DGSTI shall exercise the power only to issue show cause notices. A show cause notice issued by them shall be adjudicated by the competent Central Tax Officer of the Executive Commissionerate in whose jurisdiction the notice is registered. So, notice issued by the audit team is acceptable but cannot adjudicate the orders. However, without involving or without issuing order in original, department not allowed to start recovery proceedings under section 78 and 79 of the CGST Act. 78 initiation of recovery and 79 process of recovery should not be invoked unless you pass the order in original. Only here show cause notice has been issued and the matter referred to adjudicating officer and also started to recover the procedures, recovery proceedings which is invalid. Issue of show cause notice by audit team, audit commissioner is acceptable and adjudication of order should be issued by the proper officer of central tax, superintendent up to 10 lakhs, assistant commissioner, deputy commissioner from 10 lakhs to 1 crore. From to get my point. So more than 1 crore without upper limit, joint commissioner, additional commissioner can adjudicate the orders. Like that, the officers of the central tax should adjudicate the order by issuing the order original. Show cause notice issued should not initiate recovery unless you pass the order original. Therefore, issuance of show cause notice to that extent is valid, but initiating recovery proceedings section 78, 79 without issuance of order original is not valid. From the above, it is evident that department action to recover the amount is not justifiable. Further, my dear friends, question number 5, point number C. From customs, Mr. X, an Indian resident, returns to India on 10th April 2021 after visiting the France for 3 months. On his return to India, he brings with him the following: used personal effects like cloth valued 1,75,000, exempted, no duty of baggage. Music system 1,20,000, yes, taxable. 1,20,000 taxable. Jewelry valued 1,30,000, measuring 20 grams, brought by Mr. X. So it is also be taxable because they are not stayed more than 1 year. Therefore, 1,30,000 taxable. Further, laptop worth, irrespective of the value, for one individual aged above 18, exempted. Further, wine 1 liter worth rupees 6,000, which is taxable, which will attract GST after claiming the what we can call gender fee allowance. So 6,000 wine taxable 6,000 taxable. Further, mobile phone is taxable, which is rupees 50,000. Total here almost all 2,60,000. Am I right? Here try to say 3,60,000. The total value comes here 3,60,000. 1 minute, Rama, 1 minute. The value comes here 1,20,000, 1,30,000. Thereafter here 6,000, then 50,000. Here it is. Total comes 3,06,000. 3,06,000. From that you can deduct now. From this you can deduct the general fee allowance, which is for an individual of rupees 50,000, Indian resident, therefore 50,000. The balance 2,56,000, on which custom duty 38.5%, effective duty of customs, basic custom duty plus social welfare surcharge. 2,56,000, 38.5%, which is 98,560 is the tax amount. But the problem here, they are asking here, determine the value of taxable supply, only they are asking, not asking the rate of duty. Therefore, the answer here is 2,56,000. See, 2,50,000. Got the clarity, my dear friends? Furthermore, referring from here, my dear friends, question number 6, in that point number A, in that point number 1, list any 4 records required to be maintained by the agent under the CGST rules. Yes, we have here. As per rule number 56, sub-rule number 11 of the CGST rules, every agent referred to in clause 5 of section 2 shall maintain the accounts depicting the particulars of authorization received by him from each principal to receive or supply the goods or services on behalf of such principal separately, particulars including description, value and quantity wherever applicable of goods or services received on behalf of every principal, particulars including description, value and quantity wherever applicable of goods or services supplied on behalf of every principal. Further, details of accounts furnished by every principal and tax paid on receipt or on supply of goods or services effected on behalf of every principal, like that records to be maintained by the agent who covered under section 2 subsection 5 of the CGST. Read with rule number 56 sub rule number 11 of the CGST rules. Records to be maintained by the agent. It is from the chapter called accounts and records. Further, my dear friends, point number 2, list any 4 exceptions when theory of unjust enrichment is not applicable. Sir, whenever you go for refund is subject to unjust enrichment, means you should not get double benefits. What are the cases where the exceptions are given from unjust enrichment? Here, refund to government departments, the doctrine of unjust enrichment principle not applicable. Export of goods without payment of IGST and claiming the same refund will be granted the refund to them. Tax wrongly collected and paid. For example, collected the CGST instead of payment of IGST. Now I paid IGST, asking for the CGST as a refund. In that case, that can be granted without undergoing the test of unjust enrichment. Further, zero rated supply, including supply to SEZ units or developers, is called as the, without referring the unjust enrichment, will be granted the refund to them. That means to say that export of goods or services with the payment of IGST proof is there, the same asking for refund. Not required to undergo for any unjust enrichment test. Further, my dear friends, in that question number 6, point number B, Director General of Anti-Profiteering Authority determining that a registered person has not passed on the benefit of reduction of the GST tax rates, means profited, list the different possible orders that may be passed by the said officer or authority for the above findings. Section 171 of the CGST, where the anti-profiteering authority will impose the following restrictions: to order reduction of the price, to order return to the recipient an amount equivalent to the amount not passed by way of commensurate reduction in price along with the interest at the rate of 18% per annum from the date of collection of the higher amount of till the date of return of such amount or recovery of the amount not returned, as the case may be. In the case the eligible person does not claim return of the amount or is not identifiable and depositing the same with the government consumer welfare fund account, or order imposition of penalty or to order cancellation of registration. These and all consequences on account of reduction in the prices or reduction in the taxes, the benefit has not been passed on to end user. In that case, that will be collected by the department if not paid to the person from whom you collected, with the interest rate of 18% per annum. Your registration may be cancelled or there may be a penalty will be imposed on such person. Like that, orders will be issued by the anti-profiteering authority where there is reduction in prices on account of reduction in taxes, the benefit not passed on to end user. Further, my dear friends, question number 6, point number C, list the goods with specific condition which are not entitled to drawback under section 74 of the CGST, under section 74 of the Customs Act 1962. A number of times this point I referred in the class itself, my dear friends. Drawback of import duty paid on imported goods exporting as such is not allowed if the goods are exported wearing apparel after being used. After being used, exported back the wearing apparel, then duty drawback not allowed. Tea chest, duty paid on import of tea chest exporting back that after use or without use, as the case may be, duty drawback not allowed. Exposed cinema photographic films passed by the Board of Film Censor in India, which is imported by payment of import duty, exporting back after sometimes, duty drawback not allowed under section 74. Unexposed photographic films, paper and plates and X-ray films, if you exported back after importation payment of duty, that on account of exporting back you are not eligible for duty drawback under section 74. As simple as that, my dear friend. Your question paper December 2021 CA final indirect tax laws paper number 8. Just like that, analyze by presenting solutions then and there. Thank you, my dear friends. Thank you to one and all for listening my lecture on this particular question paper December 2021 indirect tax laws CF final paper number 8. Thank you, my dear friends, all of you. Thank you to all.